And once again, this is a penny stock. So penny stocks are very risky. And this video is strictly for entertainment and educational purposes. And I'm not recommending or telling anyone to buy this company. If you buy a company, you have to do it at your own risk. This company has a mind of its own. It will move based on its momentum. It does not react to the other companies. We could easily see the rest of the marijuana sector having a red day and Tilray be the only company in the green. So what's going on, guys? It's Investing Hustler here, and today I have an interesting video for you today. So I found this pretty interesting article titled Marijuana Stocks and New Industry Expansions for Cannabis Companies to Watch This Quarter. So I'm just pretty much going to read this article to you. I'm going to show you guys the 4 companies. I'm going to look at the charts of all 4 of these companies. And then out of the 4, I guess I'll let you guys know which one I think is the best or has the potential for the most gains. So let's get started with this article. Also, if you like these kinds of videos, don't forget to leave me a thumbs up, and I'll be making more videos like this. I usually make these types of videos with Departures Capital, but I figured I'll try it on my own and see how it goes. So let's start off with the article. So marijuana stocks are once again in the spotlight after a brief hiatus during previous weeks following Canada's legalization announcement. Many cannabis stocks pulled back along with the entire stock market, but recent developments after the U.S. midterms have pot stocks back on the watch. News that Congress was close to finishing the new farm bill added to the excitement. The bill is poised to include provisions to legalize hemp. Senator Patty Murray tweeted, "Passing a bipartisan farm bill is important to WA families, from helping put food on the table to supporting our farmers and fruit growers to promoting conservation." So in addition, New Jersey recently hit its stride as of Monday morning following Thanksgiving, when lawmakers stated that they are moving towards the legalization of cannabis in the near future. So as more legalization comes in place, here are 4 marijuana stocks to look at this quarter. So the first company is Premier Health, ticker symbol PHGRF, or ticker symbol PHGI. That's in the CSE or in the OTC market. So they announced an update on its plan to expand the scope of practice within primary care clinics to include cannabis. Premier Health has engaged discussions with licensed producers under the Access to Cannabis for Medical Purposes regulation, other licensed medical cannabis companies, and government officials in order to establish a framework for both patient and physician education. With over 110,000 active patients in our clinic ecosystem, it is important that we provide them with the best possible information that allows them to make informed decisions about their personal and family health, providing our family physicians with the appropriate tools and knowledge to prescribe cannabis, or with the ability to refer patients to a specialist within our clinics, and a key outcome to this initiative, said Dr. Essam Hamza, CEO of Premier. So the Canadian medical cannabis clinic market is estimated to be worth approximately $2.35 billion by 2025. With this in mind, the company said that it expects to provide additional updates on acquisitions in Q4 2018 and Q1 2019. Cannabis Clinic fits in perfectly with our existing telemedicine services and comprehensive app plans. The patients will not only be able to see their family doctors with our app, but also connect with their cannabis clinic healthcare workers, the education nurse, and eventually even the pharmacy or LP that is providing the prescription. This team-based and encompassing approach will provide the best and most convenient care for our patients, said Dr. Hamza in a previous release. So let's take a look at Premier Health Group. So I have their chart up right here, and obviously this is a penny stock. Right now they're about 58 cents a share, and they're up 2% today. And they don't have a 52-week high because this is a fairly new company. It looks like they IPO'd on October 24th, and they IPO'd at around 55 cents. So they've been their charts have been pretty steady. Not very volatile, except for on the 7th, when they went all the way up to 80 cents. And then the lowest they've ever dropped was closer to their IPO, which is at 52 cents. This is not a very volatile company. Usually I enjoy volatility, but the thing about this company is it just IPO'd. So at any given moment, if we hear amazing news in the marijuana industry, we could see this company shooting back up to 80 cents. That just shows the potential for growth in this company. It has a $34 million market cap, which isn't bad. Also has 34 million outstanding shares, which is a fairly small market cap, especially when you compare it to other companies that are in the billions. So I actually kind of like this company, and I can see why this article put this in 4 companies to watch. So I added this company to my watch list, and I'm definitely going to be considering a position in this company. I personally don't plan on buying today because it's a green day. I don't like buying on a green day because usually what happens after a green day is a red day, usually. But who knows? Tomorrow this company might go up to 60 something cents. It wouldn't, I don't, I wouldn't consider it a huge risk starting a position with this company. I just prefer to wait for a red day to get it on sale. So that's it for Premier Health. Let's move on to the next company. And of course, the next company is yours truly, Aurora Cannabis. So Aurora Cannabis announced this morning that the company, through a selling broker, has completed the sale in an open market of Australia's Capital Inc. units on behalf of non-resident shareholders. Payments of the net cash proceeds from the sales of Australia's units to a non-resident shareholder of record as of August 24, 2018, was completed by the custodian on November 27, 2018. In total, 11,222,000 units of Australis were sold in the public markets. The company originally completed the spin-out of its U.S. assets through the distribution of Australia's units to Canadian resident shareholders on September 19, 2018. With this final distribution of net cash proceeds to a non-resident shareholder, Aurora has completed its commitment to return capital to all our shareholders, said Terry Booth, CEO of Aurora. Holy crap, man. Sorry, guys. Since its public listing, a team of Australians have hit the ground running, executing on a number of investments with strong growth potential through our contingent interest in Australis. We'll keep a close eye on the exciting U.S. market and look to exercise our back-end right as soon as our federal regulations permit. This news comes on the heels of Aurora's recent announcement that the company has received an export request, has secured and required export permit, and has now completed its first shipment of medical cannabis products to the Czech Republic, making this the 21st country in which the company operates. A lot of big things going on for Aurora. It's just very surprising to me that we see Aurora doing all these big moves, doing all these acquisitions. We're getting news that they're going to be exporting, that they're now operating in 21 countries, yet this company still continues to decline. So let's take a look at Aurora. I'm going to look at Aurora in Canadian dollars. So right now, Aurora is down 3%. They are pretty weak. They're pretty close to their 52-week low. And so if you guys checked out my last one of my videos where it says analyzing Aurora charts, I did say that Aurora had a support at $7. And if you look at these charts, Aurora does not want to go below $7. The lowest it went, which was today, I think, or was that yesterday? Today was at $7.03. So Aurora does not want to break that support line. And I'll leave a link right here on the top corner. You guys can check out that video. And I actually say that one of the support lines were $7. And if Aurora does break that support line, we could see Aurora going back to $5.50 or even close to their 52-week low at $5.10. Aurora has a market cap of 7.8 billion, so their market cap went down, and they still have 961 million outstanding shares. PE ratio of 33.5. If you look at the technical analysis summary, Aurora is a neutral sell or a strong sell. Look at the 1 minute analysis. It's a buy, strong buy. I did place an order for $7 on Aurora. Fortunately, it didn't hit. It came real close. Maybe I should just put it at $7.10. But yeah, I'm going to be buying Aurora, especially as it continues to go down. And if it continues to go down, my next buying point will be $6.50. Next buying point after that, $6, and next buying point after that, $5.50. So I will continue to average down with Aurora. Aurora seems to be taking all the right steps to becoming a force to reckon with in the future. But that's enough for Aurora. Let's move on to the next company. So this may come to a surprise for most people. It's not really a surprise to me because we've seen this company blow up, and let's just move on to it. Next company is Tilray, ticker symbol TLRY. Tilray has some expecting near-term volatility from the stock. According to reports from Zacks, investors in Tilray needs to pay close attention to the stock based on moves in the options market lately. That is because of November 30th, 2018, $130 call had some of the highest implied volatility of all equity options. So Tilray recently reported earnings including an adjusted loss per share of 8 cents, better than a loss of 12 cents expected by 4 analysts polled by Refinitiv. Its total revenue came in at $10 million, an 85.8% increase over the last year. Tilray CEO Brendan Kennedy was quick to point out to the CNBC interview that this revenue was all tied to the medical, not adult use. All of that revenue for this quarter is medical, and we look forward to the next quarter when we'll start to see some Canadian adult use revenue in the earnings report, Kennedy said. Tilray announced earlier that in the third quarter that it had become the first and only company to receive regulatory approval in Canada and Germany to export medical cannabis flower to distribution to German patients. Let's look at their charts. I've invested into Tilray a few times, but I've only invested into them as a swing trade. I feel more comfortable purchasing Tilray under $100. That way I could swing trade it when it goes up. So that's pretty much my strategy with Tilray. It goes under 100, I buy. It gains 10%, I sell. That's my strategy. I don't have a long-term strategy for Tilray. I don't really like the company's numbers. It has a market cap of 10 billion. So take that in. Tilray has a market cap of 10 billion. Aurora has a market cap of 7.8 billion. So as of now, Tilray's market cap is way over Aurora's market cap. And Aurora had a gross revenue of 30 million. From what I read in this article, they said that Tilray had a gross revenue of 10 million. So Aurora had 3 times more revenue, yet Tilray's market cap is bigger. The reason why Tilray is very volatile, they only have 93 million shares outstanding as opposed to Aurora, who has over 900 million shares outstanding. So let's see the technical charts, technical analysis summary. So Tilray is a sell, strong sell. It's almost the same as Aurora, buy, strong buy in the 1 minute. Honestly, this company is just so unpredictable. You can't really... I think it will continue to grow just because of the volatility that we've seen when it first IPO'd and it went all the way up to $300. I think this company has the potential to go up to at least $200 again, not because its numbers, but just because of the investors that are invested into this company. This company will move. This company has a mind of its own. It will move based on its momentum. It does not react to the other companies. We could easily see the rest of the marijuana sector having a red day and Tilray be the only company in the green. So Tilray is just one of those companies, and for sure you got to keep an eye out on it because it's made some serious movements this past year. So that's Tilray for you guys. And the next one. And this company, I've been kicking my ass for this company, New Age Beverage. And I'll tell you guys why soon. So the fourth company is New Age Beverage, ticker symbol NBEV. So recently announced the closing of its previously announced underwritten public offering of 12,900,000 shares of the New Age common stock at the price of $3.50 per share, plus an additional 1.9 million shares of its common stock pursuant to the full exercise of an over-allotment option granted to the underwriters. New Age Beverages estimates net proceeds from the offerings to be approximately 49 million. After deducting underwriting discounts and estimated offering expenses, the company intends to use the net proceeds from this offering for potential acquisition. These results helped to boost shares of the company earlier this month. On Tuesday, NBEV traded as high as $377 during the regular session. In addition to this, the company announced the results of the third quarter ended September 30th, 2018 this month for the 3-month period ended September 30th, 2018. For the 3-month period ended September 30th, 2018, gross revenues reached 15.3 million versus 16.8 million in the prior year quarter. Net revenues less discounts, returns, and billbacks reached 13.2 million versus 15 in the prior year quarter. Shares were up as high as 377 during pre-market trading on Wednesday. We'll take a look at NBEV, and why I'm kicking myself in the ass for this company is because I had an opportunity. I just posted up ads. That's why my phones are blowing up. I'm sure most of you guys know I do a lot of reselling, and when I post up ads, my phones blow up. So I had an opportunity to buy this company in at $3, like right here. I posted up a buy order at $3, and of course it went as low as $3.04. And if only I posted it at 310, 305, my order would have went through and I would have been sitting pretty right now, because right now NBEV, New Age Beverages, is sitting at $4.79. So I'm really kicking myself in the ass because of 4 cents I did not get my position. I would be sitting on some nice gains right now, but I did not get my position. So right now, NBEV is close to its 50. No, it's not even close to its 52-week high, because right now its 52-week high is $9.99. This seems to be the only company that is recommended a buy in the technical analysis. So the oscillators are saying buy, summaries are buy, and the moving averages say it's a strong buy. Everything, when you look at this company, except for in the 15 minutes, it's a buy. It's literally, this company is the only one that's a buy. I personally would not buy at these prices, mostly because like I could have bought at $3.04. I should have just bought at $3.04, but I didn't. So there's nothing I can really do about it. But if this company goes back down to the 350 range, I might start a position with them again. I might start a position with them, but as of now, this company has a market cap of 322 million, has 49 million outstanding shares, which is very good. I like it when a company has a small amount of outstanding shares. That means the company can rise and dip very quickly. So it either creates perfect selling or buying opportunities. So now let's look at the 4 companies. Out of the 4 companies, which one is the most attractive to me right now? Well, I'm going to say the safest bet is Aurora, because Aurora is just, it's one of those companies that it's just prepared for the future. So if you're a long-term investor and you don't care about the short-term gains or losses, Aurora would be your best bet, mostly because I see Aurora going back up to $16 again sometime in the near future, 5 to 10 years from now. I wouldn't be surprised to see Aurora at $50 a share. That's 5 to 10 years from now. A lot of people might call me crazy for that. But in the short term, Aurora can continue to decline. If it breaks that support line of $7, Aurora can go below $7 and eventually hit $5.50. So short term, Aurora does not seem like the safest bet, but long term, it's one of those companies that I think will continue to grow. But honestly, short term, what I see the most potential for growth right now would be Premier Health, mostly because this on November 7th, which I'm sure we've seen a lot of volatility that day. If you look, let's look at Aurora on November 7th, what happened. So let's take a look at Aurora on November 7th. November 7th, see, on that day, Aurora went up to $11. So that's probably why. It just follows the flow of all these other companies. So that's pretty much why it went up. On November 7th, Aurora went up to $10.62. It went from $7.25 to $10.62. And that's probably why on November 7th, this company went up as well. But the reason why I like this company is because look at these charts. It's been pretty steady. One of these days, it's going to push forward. It's going to have a nice run one of these days. And for the short term, once again, this is a penny stock. So penny stocks are very risky. And this video is strictly for entertainment and educational purposes. And I'm not recommending or telling anyone to buy this company. If you buy a company, you have to do it at your own risk. But right now, if you look at Premier Health, this company has been pretty stable. And I could see it pushing forward one of these days, and maybe not going back up to 80 cents, but maybe somewhere in the middle, 70 cents or more. So Premier Health, that's a company that I've just added it to my watch list, and I do plan on potentially starting a position. Actually, this company, if it goes red today, if it finishes the day red, I will be buying into this company. So that's it for you guys. So if you guys enjoyed this video, don't forget to leave me a thumbs up. And if you're not subscribed yet, don't forget to hit that notification bell and smash that subscribe button. I'll see you guys on my next video. And that's it for now, guys. Bye-bye.